What's up guys, Dirk here. Happy Monday. It is September 12th, so please excuse the lack of having a camera and seeing my face here on the video, but I just wanted to make this quick update, and this is the only way I can get it out there quickly. So today's video, the weekly candle has just closed. I want to update you on that. Bitcoin is currently looking more bullish, but what we are also seeing is I'm getting a lot of messages asking, is the bull run back? Are we going up now? Is there not going to be a crash in September, etc., etc.? So what I thought I'd also do in this video is basically share with you two levels or two indicators that I am watching, that I'm looking for the price to exceed to be able to start confirming the chances that we are indeed potentially in a new bull market or a new leg higher up, which again is never a guarantee, but at certain levels we will start to flip the odds in the favor of the bulls, and that basically just gives you a better probability that we could see continuation. So let's start with first things first. By the way, if you are new, subscribe to the channel down below, click the notification bell, that way you do get updates. And if you want to get on my email list, it's the first link in the description down below. That way I can just send you an email every time I upload a new video. Nice and easy. And you can also follow me on Twitter, Instagram, and we have a free public Telegram. The links are all in the description down below. So, okay, Bitcoin 22,300 right now. Before I look at the weekly chart, actually, let's flip this over to the weekly and start with the weekly chart over here. So you can see last week was a strong green candle. There is a lot of strength behind this. So I actually predicted this in real time, even before I made a video on it on the channel, which I will link to up here or in the description down below. I actually also posted it on Twitter, and I shared, when Bitcoin was here at 19,150, I basically said this is a bullish perspective on Bitcoin. We have the 4-hour chart, which created a bullish divergence while tapping the fair value gap or the imbalance at the same point. It has potential for a bounce from here, maybe 22,000, and then continuation or rejection. And this is exactly indeed what happened. As you can see, we're currently at 22,300, which perfectly hit this. So again, technical analysis works, guys. Predictions based on the charts, on chart patterns, have a high probability of playing out. Not a 100% hit rate. I mean, nobody does that, not even the best investors in the world. The hedge fund guys, none of them have a 100% hit rate, right? But you can see how often here on the channel I make these predictions, and a lot of them end up becoming right or being actually fairly accurate within periods of time. And of course, I also get things wrong. Like I said, it's not a 100% thing, but you can see how often this works based on me breaking it down for you in real time, before the time, calling it, and then seeing it happen in real time over and over and over again. If you've been following the channel, been doing this for years already. So this happened, it moved, it shot up, and we're currently at this level over here. Now, people are asking, what is going to happen? Do we see continuation to the upside, or is the bear market over? Is the low in? All that kind of stuff. So let me share with you some of my thoughts and the levels that I'm looking for. So we're here on the weekly chart. The red is the 200-week moving average, just a simple moving average. This is the 50. And what we are looking for at the very least now is to reclaim this 200-week moving average, because as long as we're below here, there's still downside risk. Okay, we are still in September. It's only the 12th. This month historically has a track record for downside action. And even though we have had this move from just under 19,000 back to over 22, that absolutely doesn't mean we are in a new bull market just yet, and we don't have that confirmation. Now, in future, it might actually end up playing out that way, that maybe the lows are in, but we will only know that in hindsight, and we need confirmation to be able to make a more calculated guess that that is indeed the case, and at this point, not yet, in my opinion. So what I want to see, the first level that we need to reclaim is the 200-week moving average with a weekly close back above it. So that means closing back above 23.3, so $23,300. We need to get Bitcoin with a weekly close back above there. When that happens, then there's potential for, after the 200, to potentially rally up as high as the 50. This is a very simple relationship but a very easy and profitable one to be able to identify bear and bull trends. So basically we saw it here when we broke below the 50, we ended up going to the 200, right? Broke below the 50, go to the 200. Broke below the 50, go to the 200. It's a very simple relationship. It also works on daily charts, on different time frames. Okay, I'm showing it on the weekly. So by getting back above this 200, we actually increase our chances that the next move might be a run up to potentially the 50-week moving average. And only when we reclaim the 50 do we really get back in a new bull market. You can see over here, I mean, even just going back here to 2017, the entire 2017 bull run was above the 50, obviously above the 200, but above the 50. Okay, here, even when we got our mid-cycle bear market rally, when we went from 3,000 to 13,000, again, once we got above the 50, we had a nice run to the upside. Over here, the entire 2020 and 2021 bull run was above the 50 moving average. So let me say that to you too. If you are feeling FOMO and you think, oh, we're going to get a new bull market and Bitcoin is going to new all-time highs, it's going to 200, 300K, whatever, those feelings start to kick in, even though we're only at 22,000. But I get it, okay? Those feelings start to come back in. But you have to be aware that these bull markets last for 12 to 18 months, and they only start when we get back above this 50 moving average. Okay, so even if we rally all the way up to currently 37,400, we can do that and get rejected and come all the way back down again. So only once we reclaim and flip the 50 moving average on the weekly to support, that is when we can start our 12 to 18 month bull market. And as you can see over here in the past two bear markets, that doesn't happen that quickly. Okay, it takes time for this average to come down, and we could very well be looking at, another 6 or 12 months, maybe even longer than that, before this average comes down and before we are ready to start another major parabolic run. But again, we don't really know what's happening. Situation is different, right? The macroeconomics, the interest rates, the inflation, the money printing, all those things play a big role. The US dollar index, of course, too, which has been getting stronger. If that starts to reverse, potentially we could start a quicker run to the upside. But once again, it'll only really start to get into bull market territory, like crazy bull market territory, once the price of Bitcoin flips the 50-week moving average. So for now, first level to start thinking about getting bullish again is reclaiming the 200, which is 23.3. Okay, the next level after that is I would switch it back down to a 3-day chart. Same thing, 50 and 200 moving average, 200 in red, 50 in blue. And this is a bit of a tighter indicator because the time frame is obviously lower. So the moving averages tend to move a little bit faster, which gives you an earlier confirmation than only looking on the weekly. So on the 3-day chart, what you want to be looking for is at least a reclaim of the 50-week moving average, which is the blue, because you can see also over here in 2017 the entire bull market over here was above the 50 moving average on the 3-day chart. Same thing over here, this bigger rally, which I just showed you on the weekly chart, it only started later up because that's a longer time frame. On these shorter time frames, you can see as soon as we flipped it, that would have been a better or a faster indicator to be able to get you in earlier once we're above that to start a big run to the upside. And again, the entire 2020 and 2021 bull market was when we started getting back above this 50 moving average on the 3-day. Okay, so right now we've been below it this entire time. So again, that was an amazing signal in hindsight just for getting out of positions. Okay, that's when the bear market started. We crossed below 50, went to the 200, got below the 200, and we've been below this 50 ever since. So keep this in mind. This is also a very, very easy to follow system for the next bull market, and also for knowing when to get in and when to get out of the next bull market. If things start to go crazy, we have a massive run. As soon as we break below this 50, that's when you should start being cautious again. Okay, so very, very simple to do, actually very easy. So for now, keep an eye on the 50 moving average on the 3-day chart, which currently is at about over here 25.4, something like that. So if we reclaim the 200-week moving average at 23.3, the next level I want for confirmation is reclaiming, getting back above this 50 moving average on the 3-day, 25.4, and we want a proper reclaim because you can see over here it poked through it a little bit a few times, a few 3-day candles, and then it collapsed back down. So we need a proper reclaim and flip of this level. So basically only if we get back above $26,000 can we start to consider, well, maybe the bottom is in and maybe we are in some sort of new bullish trend. Until that happens, there is still the fair value gap on weekly, and there is still potential for us to go into the low teens, potentially somewhere between 10 and 14,000. But once again, we won't know for sure what the exact ultimate bottom was until 6 or 12 months down the road, where we can really see in the same way. Like here we can see for sure this was the bottom and we had a major run, or this was the bottom in March 2020 and we had a major run. But you don't know that until 6 or 12 months down the road, and you can really say that with complete confidence. For now, we can have any sort of rally even up to 26k, and it can reverse and come back down. Now, one thing we also have to be very careful of, which is going to be tricky if it does end up playing out, is the following scenario. So you can see I drew something here that would be trickery, because this scenario would basically reclaim both of those levels that I just mentioned, and for myself and for a lot of people would basically trigger, well, we are now in a much more bullish trend, short term and medium term, and potentially even longer term. And the trick is going to be, if it does this would be very sneaky, because what it would mean is maybe, everyone's betting on short and a breakdown right now. Maybe we still get that breakdown, but not yet. And first, we go up to liquidate all the shorts, right? We create that disbelief. Nobody thinks we're going to rally. We're all going to break down. So people are shorting. People are sitting on the sidelines. It continues to pump, and it runs these highs over here. Okay, it runs maybe 31 to 33,000. So this liquidity, people who have stops over here, it actually goes above that. You can see we have a fair value gap or an imbalance here at about 33,000, 34,000. So what if, instead of breaking down now, it continues to pump, it flips those two moving averages, the important ones that I've been saying, a lot of people start turning more bullish, and as we start getting closer to 28, 29, maybe 30,000, 31,000, everyone starts to think, oh, okay, the bottom is in, we are going to new all-time highs, we are going to the moon, it is time to go all in. And a lot of people are going to start really just longing this towards the top over here. A lot of people are going to have FOMO and just, buy in with all their stablecoin allocations towards this top, and then it reverses, it drops back down, it takes out the lows, it sends us to new lows. Maybe only then it hits that $10,000 to $14,000 level somewhere later in the year, in a quick way, in a similar way as it did over here in March 2020. Because you can see when we had that, we had this kind of flat bottom, and instead of it breaking down right away, which could have been the expectation, instead it rallied first, then we had the March 2020 sell-off, it went below those lows and quickly recovered within a month. So this scenario also wouldn't be too crazy, and it would catch a lot of people off guard. It would get people to get liquidated on the way up because they're shorting it, get people to long the top over here, and then they get liquidated as it dumps, it takes out these lows, people think it's dead, they start shorting it again over here, and then it goes all the way back up and it recovers, or it accumulates for 3 or 6 months and then goes up. Something like that is also possible. So we're going to have to wait and see as it develops, and that's why it's so important to keep an eye on these charts. Basically, it's 24/7, 365, and every day, every 3-day candle, every weekly candle as it develops gives us more information, and we should continue to monitor that and be ready to adjust our bias if the chart is showing us that we want, or that it wants to go in a different way. And that's basically exactly what I did with the 4-hour chart, where, on the monthly chart I say, hey, be careful September, based on the monthly candles, we could get a sell-off. But obviously a monthly chart is very slow because it takes a full 30 days to create that candle and to be able to create new analysis. But then on the weekly, obviously it moves a lot faster. So we get a weekly close that looks different. Well, then you can say, hey, maybe we need to adjust, or a daily close even quicker, or 4-hourly close, and you can start to see the bullish divergence and the fair value gap, and you can start to say, well, even though my weekly or monthly bias is still bearish, on the 4-hourly, on the short-term time frames, it is starting to look bullish. So I'm going to not short it. Actually, I'm going to long it in the short term, and maybe over time that also increases on the weekly and the monthly as it's been developing right now. So for the time being, we got this bullish. Even here on the 3-day chart, you can see there's a bullish divergence. The RSI is making a higher high, or a higher low, sorry, and while the price made a lower low. So bullish divergence on the 3-day, bullish divergence on the 4-hour. We caught that in real time. Remember, I shared it even on Twitter, but also in my VIP Discord group. So, if you want to stay on top of these trends, come and join us. You literally get daily updates from myself. You get newsletters, there's courses, there's a TA course, you get my own buy and sell movements, all that kind of stuff. If you want to find out what's inside and you want to become a VIP member, second link in the description down below. Click that, you'll get all the details, and you'll be able to sign up risk-free, 60 days, 100% money back guarantee. So come and join us there if you want this analysis on a daily basis. But basically that's important, whether you get it from me or whether you're doing it yourself. The trend changes all the time, and you have to be flexible enough to be able to identify those changes and change your bias, you know? Like here, instead of betting on it's going to break down or shorting it at the bottom when it's about a reverse, which a lot of people are doing, if you can see that the technicals are pointing towards we have a bullish divergence, you know, things are looking like they want to rally, then obviously it would be stupid to continue to short it, because the charts are telling us otherwise. And you don't get it right every single time. It's obviously not the easiest thing in the world. Like even this, I don't know if this scenario is going to play out, but it's something that I'm open to if as the price develops, to be able to say, well, maybe this scenario is in play. That's what it's all about. It's about if this, then that, and you have various if parameters. So if it continues going higher, if we reclaim the 200-week moving average, if we reclaim the 50 moving average on the 3-day, well, then maybe we run up to 33K. And if we get rejected at 33K, well, then maybe it runs all the way back down to new lows. Okay, so these are all possible scenarios, and that's why it's important to keep an eye on the charts. And of course, to subscribe to my YouTube channel, because I give you this info for free basically every week. In these videos, follow me on Twitter. The link is in the description down below. And like I said, you know, if you really want this in real time every single day, join my VIP Discord. It's literally like the equivalent of a cup of coffee at Starbucks every single day. It's the value you get for it, super cheap, and you get the updates. You get to join the community. So again, you know, check it out. Second link in the description down below. But basically, to summarize what I'm looking for now to be able to determine are we in a new bull market or not. Like I said, step number 1, reclaim 200-week moving average, 23.3K. Step number 2, reclaim the 50-day moving or the 50 moving average on the 3-day chart, which is currently about 25.3K. And if we get that, then we can start to consider getting more bullish, but we still have to potentially watch out for this just over 33,000 as a potential rejection zone in the near future. So hopefully you did enjoy this update. It was maybe a bit long-winded, but hopefully, you know, this helps you understand charts more and helps you look at the markets more from a if this then that perspective, and be able to be more flexible, because that is the important thing. It's not about ego. It's not about being right all the time. Sometimes you're wrong, and you just want to try and recognize when you're wrong as quickly as possible so that you can avoid losing money, and try and lose as little as possible when you're wrong, and then try and catch the trends. You know, because one of the worst things and one of the easiest ways to lose tons of money is to go against the trend, because you're stuck with your bias. If you continue, you know, shorting all the way down, when it eventually reverses and it continues going up, you're going to lose all your money trying to short it as it continues going higher and higher, because at some point, you know, the trend is going to reverse, and you need to be able to catch that reversal and change your bias in your mind that, hey, we're no longer selling rallies, we're actually going to start buying dips. I'm going to wrap it up here because I can talk for hours. Thanks for watching, guys. Smash that like button, get on my email list, first link in the description down below. And if you want to join the VIP, you want to be in the Discord, we can talk about this stuff all day, every day. Second link in the description down below. Have an awesome day. I will see you in the next video.